Welcome to the Golden Truth YouTube video show. This is episode 2, and today I wanted to focus on the gold market manipulation.
But Dave, gold market manipulation is like the Geico ad. Everybody knows it.
Yes, but do you know the specific tools they use to manipulate the gold market?
No, I do not. Please proceed.
So today I wanted to talk about options expiration week on Comex futures, because if you go back and you look at the history of when options on Comex gold and silver futures expire, the gold market is always taken down. It always happens either on the options expiration day or the day after. And I just want to focus on the options expiration day event because it gets a little more complicated if we discuss why it might happen the day after instead of the day of. But at any rate, that's what happened this week. Gold opened up on Monday evening after the holiday weekend at around 1292. It was threatening to take out 1300, especially with all of the geopolitical stuff going on around the world and the fact that Russia and China signed that $400 billion energy agreement that's not going to include the dollar. So with Tuesday being options expiration day, the gold cartel bullion banks decided to go to work on Tuesday. Gold drifted lower early in the morning, as it usually does when London opens up. And then right at 8 a.m. on New York time on Tuesday, the gold market started to take a big hit. And there was no news that triggered the hit. There is absolutely no reason why gold should have gotten smashed like that. The Comex hadn't even opened yet, and they decided to smash the gold market. Well, this is what happens. On Tuesday, the options, the call options and put options on Comex gold and silver futures expires. And what they like to do is when there's a lot of call options that have built up near the current market price of gold, what happens is speculators start to pile into the call options, as expiration as the contract month gets closer. And the way that works is speculators buy call options, and the market maker banks sell them the call options, and they collect the call option premium. So the idea is if the cartel can force the gold market down far enough so that a lot of call options expire worthless, the speculators lose the option premium and the cartel gets to keep the premium. At Duke and Duke, we don't care whether our clients make money or lose money. We get to keep the commission. That's basically how it works. So anyway, John's going to put up a slide that shows the call option series on the Comex as of Tuesday morning. And you'll notice that I've highlighted the call series from 1300 down to 1265. And you'll also see that there's a significant amount of open call options all the way down to 1265. In fact, there's 9,918 open call options. Now, if the cartel can get those calls to expire worthless, they're going to keep a lot of option premium. And lo and behold, that's what they did. At 8 a.m., they smashed the market. They in the course of 6 minutes, they dumped nearly 30 tons worth of gold on the market. As soon as the Comex opened, they took the gold market down even further, and that was the point at which they were able to get gold down to right around the 1265 level. It closed that day just like 40 cents above 1265. Now, to put that in perspective, in its registered available to deliver category, the Comex only has 22 tons of gold. So they basically dumped more paper gold on the market than the Comex even had available to deliver if everyone were to stand for delivery for the month of June. That means that all of those call options expired worthless. Even the ones at 1265 likely expired worthless because, maybe they had 40 cents of premium in them, but the holders of those calls aren't going to exercise them. So essentially, the people who bought those call options over the last several months saw their premium erode away to 40 cents, and the market-making banks got to keep the premium. Now, this is something that happens every single period when there's an options expiration on Comex futures. It happens without fail. You can go back and look at the past 10 years of data, and you'll see that on options expiration day, they take the gold and silver market down. And that's one of the tools, how they manipulate the market. I hope this video was helpful in terms of understanding exactly what happened on Tuesday, because that's exactly what happened.
So Dave, if I follow you correctly, during the space of 6 minutes on Tuesday, 30 tons of gold was dumped onto the market in a market where there was only 22 tons of gold available for delivery. Is that correct?
Yes, that's correct. And that, my friends, is the golden truth.